What are the themes so far for 2026?
Well, our survey, this is our February 2026 survey, and the themes that emanated from that over the last several months, including February. GDP is stronger than the labor market. Even though GDP for the fourth quarter was only 1.4% growth, labor growth was even less than that. We're just not adding jobs to any significant extent, and I'll talk about that momentarily relative to the midsection of the country. Not hiring, but not many layoffs either. And back last time we were talking, first of the month of February, now the 1st of March, the K-shaped economy, those who are more well-to-do are doing better, those in higher paying jobs doing better. Small firms better off than large firms, although right now we're seeing some real weakness in the S&P 500 and the NASDAQ, and they've declined over the last month, not near their recent high. And I'd say another issue is, in my judgment, the Supreme Court issued a statement and a ruling that really saved the president from himself. Now, he didn't take that as I would have hoped he did. By that I mean just let it go. He instead implemented even more tariffs and more uncertainty, so we'll deal with that. And there's weakening exports and imports. And if you look at the exports and imports for the 2025, even with these tariffs, we're still running a deficit, and the deficit did not come down to any significant extent, about 0.5% from 24 to 25. And of course that hurts agriculture and manufacturing. And today I'm going to talk about our manufacturing survey for the month of February. Here we are on the first business day of March.
According to supply managers in the 9 Mid-America states, how is the economy performing?
Performing better, and it's much like the national number. It boomed up there. Boom is not probably a good word. It got up there, crawled up there, but it was a good reading. 54.7, that's February, versus January's 49.6. Obviously, that's above growth neutral. And of course, this is a survey of supply managers in manufacturing, stretching from North Dakota, Minnesota in the north, right down the midsection of the country to Oklahoma and Arkansas in the south. So it was good reading. It was a good, I'll call it a solid number. Perhaps good's not the right word, but it is the highest reading we've had since March of 2025. But the trade numbers, they became less negative. That's all I can say about that. The import reading was 42.5, and that's up from 38.2 in January. The export reading was up 47.2. Still, both those numbers are below growth neutral, but that's up from 45.4. We asked about supply managers and tariffs. 6 out of 10 of them said that 6 out of 10 supply managers in manufacturing in our survey reported that tariffs were hurting their firm. So that's obviously not good. And 87%, we asked about AI, and this did surprise me, 87% said not much of an impact at all in their company thus far. So that's what we're seeing. And here I'll bring up the survey results. Now this is the overall number, which summarizes elements of the overall survey. And you see there in beautiful Creighton blue, 54.7, rising up there. Later on this morning, the national number will come out. I expect it to be up as well. Now, in black there, you see that's the rural economy, and that'll come out in the third Thursday of March.
What were the hiring trends?
Hiring was not good. It was down for the 11th straight month. The reading for February is 49.2, and that's up from 47.2 in January, and that's good. It's getting close to growth neutral. But over the past 12 months, when you look at the entire economy, now this is not just the manufacturing economy, the U.S. economy added 181,000 jobs over the last year. Now divide that by 12, that is, I won't call it pathetic. It's almost recessionary, but not that. It is growth. The region actually had a much better, and that was 0.1%. And the region added 117,000 jobs, and that's 0.8%. That's still not what we'd like to see. We'd like to see the numbers being much better than that.
What inflation trends are you noticing?
Inflation, oh boy, it was a price gauge from 58.2 in January to 60.2 in February. So on the inflation front, it's getting a little less satisfying. And the PCE, the index that the Fed watches, that's showing that the year-over-year growth is still too strong. Now this is a wholesale price gauge. The retail price gauge, which is the PCE, was up at 3% year over year. And it's well above the Fed's target. And unfortunately, that's just not where we'd like to see inflation.
What is the economic outlook?
The outlook, my outlook, is no change when the Federal Reserve meets on March the 17th and 18th. There will be no change. In fact, if I had to say, if they were forced into doing a change, I would bet it would be an increase. They're not forced into change. They'll do nothing. 90% probability, probably even higher than that. No change then. And keep an eye on what the balance sheet. There, we got this new guy, economist, Kevin Warsh, who's coming in. He doesn't like, he's not favorable toward a QE, quantitative easing. And in December, if you remember, not only economists would remember something like this, but the Fed, the Open Market Committee, said, we're going to resume increasing the balance sheet by $50 billion. That means they're going to be out there buying treasuries in the market to the tune of $50 billion a month. Now that tends to keep long-term interest rates down, and that's not what many of us economists believe is good. So that's what we're going to, and that'll be, watch that. I don't know what I expect him not to make much of an announcement because Kevin Warsh is not on the committee yet. He's got to be confirmed by the Senate. CPI, keep an eye on that, of course, month over month. Now look at the month over month. Not so much, there's so much press attention to the year over year. Look at the month over month and take the last 3 months and annualize that. I think that's a better number for you to tell where things are going. That number is still too high, but well above the Fed's target. Long-term interest rates, I expect those to remain a bit stronger, a little higher, but in this range, sideways to higher, and more volatility there because of the Fed's buying of long-term treasuries, what we used to call QE. They don't even give it a name now. I think it's comical, but that's economic humor, and who wants to hear that? Keep an eye on the bond market. That's where the action is, not the stock market, the bond market. Stock market, that's anybody's game. Certainly Mr. Buffett here in Omaha knows that game far better than Ernie Goss will ever know it. So keep an eye on the bond market. And when the yield moves below, if on the 10-year Treasury moves below 3.9, that's an issue. The economy is slowing down. Above 4.8, too much inflation. Federal Reserve's balance sheet, that's the number one thing I'm going to be watching, what's going on there, because that'll tell you what the Fed really believes. I mean, Jay Powell's not going to really tell you what collectively they all believe because the press will go crazy, I think. The national ISM number for February, which, as I said, comes out later on this morning, that's going to be an important number. That's telling us that the manufacturing sector, after all this time, may be doing a bit better, and I think it will be a bit better. Price of a barrel of oil, keep an eye on that. That's moving up, $65 a barrel, West Texas crude. It's probably going to be moving up even more. Now you got the crisis, well, it's not a crisis, maybe a crisis in Iran. That, of course, pushes up prices. That's an inflation producer for sure. And it's also a gold price producer upward. But listen carefully to statements by the FOMC, members of the FOMC, and even Kevin Warsh. Now, he's going to be pretty silent now. He got appointed by the president. He's not going to be making many statements now. He's going to be like a cloistered nun in a monastery, you know. Junk bond yield versus the 10-year yield, that's something to watch. That gap is too narrow. Keep an eye on that. And Friday's job report is probably going to come in. If they may even delay it again. They did it last month. They delayed it. It was not good. Everybody said, well, it was positive. No, it wasn't. It was a positive number, was not a positive news. It was not good. Watch the price of gold. Gold is now sort of settled into a range. If it moves higher, that's an indication of greater risk out there. Moving lower means not as much risk, so that's something to watch. So that's it from here at Creighton University. I'm Ernie Goss. I'm an economist here, McAllister Chair, and I conduct this along with my pal here, Kristen Crawford, we've been doing this, Kristen and I, for a while, and I thank her, of course. And I thank you for joining in. Until we meet again next month, first business day of April, may your economic cup runneth over. Thank you.